The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 13th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply the tools that empower human potential, because living up to our potential, folks, that is what we must master each and every day. So let's go take a look at a couple of my favorite quotes out there. Authors unknown. Goes like this: there are some things you don't have to know how it works, only that it does. While some people are studying the roots, others are picking the fruit. It just depends which end of this you want to get in on. And then secondly, life asks us to make measurable progress in reasonable time. That's why they make those fourth-grade chairs so darn small, so you won't fit in them when you are the age of 25. 877-927-6648. That's our call number. Give us a call if you'd like us to take a look at your stock chart or any other questions that you might have out there. Right now, the Dow is trading off 34 points, composite down 10, out at 32.32. S&P's off 3 points. The Russell 2000 down about a point. So the Russell 2000 is not really moved down that much. Red across the most active stocks: Google, Apple, Microsoft, Intel, Cisco. Apple, though, only down about 85 cents right now. Pop into the upside here. You've got Netflix. That's a leader in the clubhouse, up $6.40. You've got VMware up $3 and change. You've got Hunt, JB Hunt Transport, JBHT is the ticker symbol. They're up 3% all-time highs. Affiliated Management, AMG, is up about $1.77. You've got to the downside, Spectrum Pharmaceuticals, still the leader to the downside, off about 4 points. Google right behind them. Melnix Technologies, Inter Oil Corp off $2.50. CVR Energy off a couple of bucks. Tesoro down $2.50. Marathon Petroleum, looks like a bunch of Valero Energy. So all the energy stocks look like they're taking a little bit of a hit out there. We'll go take a look at the XLE, the energy sector, as well as anything else that you'd like. Just give us a call at 877-927-6648. Let's start off by taking a look at the composite. The composite out here, what I've got up on my screen, the composite, the weekly chart. We were looking at this last week. The blue lines going across my screen here, those are the primary trading ranges. I've been doing some work with Bud Rolfs over the past week or so, and those are the primary trading ranges, folks. Just simply where price just simply acts as magnets. So when you get up over them, you're simply going to typically move to the next level, just like an elevator out there. And as well, when you get up to the top of that range, that's why it's called a range out there, you can expect some resistance. As a pilot, you'd go ahead and put on a turbulence sign here. Well, we take a look at the top of the range, these primary trading ranges here inside the composite, going anywhere from about, let's think the low is right around the 3,100 to 3,250. So you've got a 150-point range on this. Well, if you take a look at last week, getting up and actually closing at 3,244, 3,250 being the actual high, got up to 3,248 inter-session last week. Well, what did it do so far yesterday? 3,252.87 was the high. So you've got the composite up against an area of resistance, just taking a look at just normal trading ranges. What could you do now? Well, the market could start to move back down if it can't bust out of it, move back down into the midpoint level right around the 31.75 level. Look for that to be an area of support if, in fact, it does back off. If we go take a look at the daily charts out here, let me see, where is the daily index that we're going to take a look at? We'll take a look at the S&P 500. Yesterday, as I mentioned to you, it is so good with a market that's been moving up like this. All you really need to do before, for those of you eager and wanting to get in on a short position, just let the market prove itself to you. No better opportunity to show you the reason to do that than yesterday in the marketplace. Yesterday, the S&P had the chance to make a real reversal signal, had the chance to make a bearish at least a bearish engulfing candle, had a chance to actually make a key reversal session. Key reversal day was actually made down at the lows here on November 16th. Now, key reversal day, I mentioned this to you again yesterday. Key reversal day is going to take three things. Number one, the candle's going to close in the opposite direction of where the market had been trending. In this case here, off of the September 14th highs down to the November 16th lows, clearly trending to the downside. This being a green candle would have closed in the opposite direction, so qualified underneath that first element. Number two, you need to be able to, price needs to exceed both intraday, the low and the high of the prior session. Some people will say on a what I'll call on a very I forget the word, so it'll come back in my mind at some point in time. But in any event, some people say it needs to gap down below the close of the prior candle, in this case here, for a reversal signal to the top. I don't think it needs to. It don't need to be that critical on the definition. So as long as the high and low of the prior candles exceeded, and you can see here November 16th, no question that was done, and it must come at an extended condition. During the middle of a move, it's not a key reversal session. And there's a couple different ways. You can certainly use expansions of swing points. You can use A to B equals CD down patterns. I think one of the easier ways is just take a look at relative strength, relative weakness. In this case here, definitely the market moving into the relative weakness area, just like we have here right now, or we had yesterday as the opportunity. If we take a look at the candle, the session from March the 11th, the high was 1556.27. Well, what was the high yesterday? 1556.77. It met that criteria. How about the low of the session on the 11th? Well, the low, 1547.36. It did not make it down there yesterday. Got down to 1548.24. Yesterday's candle, if it had gotten below 1547.36 and closed as it did in red, it would have been a key reversal session, even though it wasn't a bearish reversal candle. Now, what's nice here about the November 16th is you actually had a bullish candle out here. Today, really the same set of elements. Now, what I mentioned to you yesterday is that if you take a look at the S&P, if we put this on a weekly chart, I don't know if it'll transfer over here or not. Let me see. Yeah, it won't, so I don't want to do that. I'll go find my weekly chart somewhere else. Right now, you're just going to have to, I moved that away, and now it's gone. I think the red line here, which is right about 50, I'm going to give you the right number. I'm not going. Well, we're going to do it. Actually, we're going to do it right now. So let's go switch over to. Let me see if it's on this chart here. It may or may not be. If not, I'll go ahead and pull it up. So give me a break here. And what I'm looking for, folks, I'm looking for the swing point low from the October 2007, the weekly candle on the October 2000. There we go. October 2007. Well, that's the same chart. Let me just pull it back, and we'll go hunt it down. And we're looking for the October highs. That came here October 12, 2007. The low there, 1546.72. That, in my opinion, is what it is that you want to write down on a pad of paper. If today you get a close below 1546.72, you will have gotten a reversal signal. At least the place for you to have put on a trade in order to be able to take a short position in the marketplace, because you will be back below the range. Now, the weekly candle. Excuse me. What does that mean? That means, you close back inside the range tomorrow, or you close back inside the range on Friday, and maybe you really don't have a rejection out here. And why? Well, you're so close to tagging the 1576.09, the October 2007 highs. Other than the New York Stock Exchange, everything else is over. The composite was over. The composite got over that level in 2007. The Dow, as we know, is over. The Russell 2000 is over. So why wouldn't the 500 stocks inside the S&P not want to go and tag that level? I say until you clear convincingly below 1546.72, that means a close below 1546.72, you're not out of the woods. In fact, the S&P is saying more like, and yesterday's action is a perfect example, is saying more like it wants to at least go tag that area. No real benefit to be in nowhere's land, in the middle of a move. Wait till you get to a floor. So that number, 1546.72, that's one that I'm paying attention to. It's one I think you should be paying attention to as well. Again, 877-927-6648. Let's go peek in. We'll come back and take a look at the indexes here in a moment, but let's go take a look at what's going on around the world, because we're going to peek in here on the FTSE. Now, the FTSE right now off 55 points. The DAX is basically flat. It's down 10 points. Why are we looking at the FTSE? Well, the FTSE on the daily chart we're looking at really an incredible 1.618 butterfly expansion in about the 64.50-ish range. It's trading at 64.55 right now. You got a nice 2.6-minute expansion of your B to C swing point, and broke out above that. But today you're getting your reversal candle. Now, last time any reversal candle showed up in the FTSE, really back in the February 21st as well as February 26th level. So now you're getting another reversal candle, bearish engulfing candle so far engulfing the prior two trading sessions. Is that saying a lot? Yeah, it's saying a little. Why? Because, look, if these are small-bodied candles that it's engulfing here, if it gets down and closes today, the number on the FTSE closes below 64.39.20, that would be a nice bullish bearish engulfing candle out there. And if I knew an ETF to trade on the FTSE, maybe somebody in the den actually, knows an ETF specifically for the FTSE, we could look at an actual trade set up for that. But I don't know that off the top of my head, so I won't spend any time. But if you do, you can give me a call or you can type it in on the den. If we go take a look, let's go back now. And that's really the biggest mover out there. You did have the markets over in Europe closed down. Let's go take a look at the Nikkei, see what it was doing. The Nikkei trading down last night, 75 points off, about 0.6% out here. Is this giving us reversal signals? Right now, really all the Nikkei is doing is just simply working off a overbought condition out here. So I don't know that this is really giving us much of a reversal signal, and at least not just yet. We need to go check in on the yen trade out here as we take a look at the DAX here. All we can see inside the DAX at this stage is nothing more than a series of small-bodied candles. Doesn't mean that the market is getting tired up here. No real conviction behind any move. And I'm really just coming back to the last 4 trading sessions, the last 5 tradings, the last 6 tradings. Really, I guess you go back to March 6th out here. Not a whole lot of conviction in movement because the body of the candle, that really is in my opinion, that is really the essence of price. The extreme emotions of the day are nothing more than those wicks. The top end and the bottom end just simply tell you the emotion that went on inside the marketplace. So let's go peek in then on the currencies here. Let's go look inside the euro. The euro giving up a support area. That support area really set up by the most recent bullish engulfing candle. That was from March the 7th. But the following trading session on the 8th made that candle very suspect, and it was not difficult, looks like here, for the euro to really bust through that area. Where could the euro head to? Well, 1.28841 is the 0.786 retracement off of the lows from November 13th all the way up to the highs that were put in on February 1st out there. So the euro, we have to put this on a 30-minute chart just to get a better feel for what might be going on inside the euro. We can see right now getting into that extremely oversold territory. Last time it was down in that extreme oversold territory was back on Jobs Friday after the jobs release. Looks like the euro should start to bounce or move sideways in just a wee bit of time. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow off 22 points right now. Composite down 5. And yesterday, if you're listening on the show, we had a call from Rick from British Columbia taking a look at the XLP out in the marketplace. Now, the XLP, folks, that is has really been on fire. The XLP is the consumer staples. Sorry about that. A little brain contusion there. The consumer staples sector inside the S&P 500, which absolutely has been on fire. Now, we're taking a look at the 1.272 butterfly that was in place. That actually formed here back on the February, the first out here, blew through that level a couple trading sessions later. Once you do that, you go up to the next floor, $38.22. That was the 1.618 butterfly. I don't have that drawn in. I can go ahead and draw that in here, though. Right now, you can see what that actually looks like. But that level also, it busted through. And so the question was, where is this thing going to head to as it's making, continues to make its all-time highs? Now, one of the things that I like to follow, one of the tools, use a number of different tools just simply to get a read on the marketplace. And the summation index developed by Sherman McClellan and his wife, I apologize, I forget her name. Great tool to understand the market trends, a great tool to be able to pick off when trends are changing. And the summation index specifically for the XLP. Now, a more reliable summation index is going to be on the wider breadth of the marketplace, which is going to be either the Wilshire, I suppose, or the New York Stock Exchange. But still, inside the XLP, Rick had called, and I did a little bit of additional investigative work on it. And yesterday was the first day that the XLP, the summation index, actually ticked sideways. Ticking sideways for something that has been so strong in the marketplace has to make you say, something to think about. Now, if you get a lower close today inside the XLP, I expect that what we'll see is a downward tick. And that downward tick in something that has been a leader out there in the strength in the marketplace is something to absolutely be paying attention to. Right now, nothing in the way of volume. Now, I wouldn't be shorting this, most certainly. You'd have to go in and take a look at, we were talking about some of the holdings out there, Walmart, et cetera. You don't want to, if the market gives us a sell signal, and for those of us, with inside the contributors in TFNN, we each have different sell signals that we look for. So I'm using the Stevie version of a sell signal, and I really gave that to you inside the S&P, since we're just looking at the S&P sectors out here right now. To me, that is the S&P giving a clear signal, and that's closing below the October 2007 swing point low for the week of, I believe it was October the 11th out there. And so if you get a sell signal there, you wouldn't be taking a look at shorting the strongest ETF, the strongest sector out here, but you would be looking for confirmation. That's the beauty of it. You want to be able to get information both from strength and from weakness inside any marketplace out here. So inside the XLP, if you get a close lower today and you don't get that close below the swing point low in the S&P, I say not enough information out there. I want the larger market to tell me what it wants to do as opposed to just one sector out here. So that was on the XLP. That was really just a follow-up more for Rick. I believe he listens in during the 10 to 11 hour out there, and so just wanted to follow up on that for him as well as all of you out there as well. Let's go peek in here on the energy sector. We saw that a lot of the a number of the energy stocks were trading down, so we'll take a look at some of those as well. When I say a lot, I mean VLO, Valero's off about 4%. Inter Oil Corp is off about 3%. Marathon Petroleum, MPC down a couple percent. Holly Frontier, Phillips 66. So the entire slew is trading to the downside out here. The energy sector, though, not doing a whole lot out here. In fact, the energy sector really got above the downdraft from February 25th. That high is 78.72. It's a trade at 78.89 out there right now. So as much difficulty as we're seeing inside some of those individual names, overall, the energy sector, so that must mean ExxonMobil, which inside the energy sector is probably it's a significant percent. It's 20, 25%, maybe even more than that out there. So not seeing any bearish reversal signal just yet, other than just the mere fact that you've got two bearish candles out here from February 15th and the 20th. So we know that the area of resistance, we can draw that line across the screen. That is certainly drawn in the sand just by paying attention what the candle formations are. And you can see yesterday you did get that doji in the window. I'm talking about the window being between the high of February 25th. That price is 78.72 all the way up to the highs on February 14th out there, 79.51. So you do get a little bit lower price today. The leaves are maybe just starting to fall off the trees, but it looks more like leaves in the autumn time that you actually have to pull off the tree because the XLE not showing a ton of weakness. Volume-wise, 1.8 million shares. The XLE getting definitely losing some energy, as you can see with that doji of yesterday. 877-927-6648. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. And folks, if you are going to be in the San Mateo area or anywhere near the San Mateo area coming this Saturday, come over to the homepage of TFNN.com. Tom O'Brien, Daryl Martin, they will be out there from 8:30 to 12 noon providing a incredible education. Dynamic trading strategies is the name of the workshop. There's going to be all kinds of prizes out there. The combination of prizes, $2,500 worth of prizes. Some might be newsletters, some silver, some diagnostic trading system that Daryl has developed. I mean, just a wonderful opportunity for education and to walk away with something nice as well. All the details on the homepage at TFNN.com. Anywhere near the San Mateo area, San Jose, San Francisco. Heck, it's worth driving up from L.A. to go check that out. Then you got nothing like that drive along Pacific Coast Highway, of course, from L.A. to San Mateo. That would be a long drive. I would suggest something other than the PCH all the way up there, but that would be a beautiful drive for sure. We were talking about the energy sector before, so let's just dive down into ExxonMobil here. Let's take a look at the daily and weekly charts out on the screen here. So as we start off taking a look at the daily chart, what we can see here is really, last couple of days, nothing more than sideways move, small-bodied candles. We do see where the line of support is. That support, of course, none other than the same thing that we're taking a look at inside the marketplace here. You've got that January 2nd level. In this case here, you've got ExxonMobil gaps up It doesn't do with anything extreme volume or anything. In fact, only 16 million shares as it gapped up. You had that nice bullish engulfing candle on December the 31st. So your area is certainly of support here. Let's go ahead and draw the bottom one in as well. We'll put that as a dark colored line, a black line out there. So we know where the real trading range potentially with inside ExxonMobil. Now, as we take a look at it, you also know that at this January 2nd gap up level, we also have some bulls that are hanging out here. You've got this little bullish engulfing as that level was tested on January 8th. It was tested with 14 million versus the 16 million that it gapped up with. Also was tested with 12 million on January 7th. It was tested again here with 13 million on February 7th out there, and held. Now, you can move your line. You don't have to just make it at the bottom of the swing point. You want to be able to move your support and resistance line out here, to see where you've got the most number of tests in that general area. Remember, we're using these as guidelines. Good guidelines, though, by the way. And in this case here, we can see where the actual support level is that has been tested. Even on the large downdraft candle day, the bearish engulfing candle on February 25th, still only 15 million shares going against 16 million shares. Not enough to bust this equity down, nor is it enough to really, move topside out here, but you've got really darn good support. So I would say that energy sector that we were taking a look at, the XLE, even though, you've got a bunch of energy stocks here this morning trading lower, and we said, hey, got a lot of stocks that are trading lower. I'll eventually be able to learn how to speak to you. But the XLE wasn't really budging a whole lot. Well, that's because of the weighting structure of the XLE and where ExxonMobil. Now, what's also interesting and always very important to be able to take a look at different time frame charts is I'm going to go ahead and punch the weekly chart up on my screen. So if you're following along on the home game here, when you take a look at that weekly chart, what we see here is we see an area that was strong resistance now has become support. That was the resistance level going back to 2011, February 25th, 2011. The high out there, 88.23. And what did ExxonMobil do on the weekly basis? Well, number one, broke above it, 52 million shares, taking out 122 million shares. Well, that's not a valid test for sure. Comes back down, gets back inside the lower part of the range, has busted back out, hasn't busted out with any volume, so to speak, 60 million, 66 million out here, so no big volume taking it out. But what you can see is the old resistance line right now truly has been acting as the old support line. That's why you want to be able to have these things drawn on your screen as well. So what we can see here is even last week that level was tested 62 million. Now what you're doing is you're also using the volume. Now you had 122 million that the market is going against. And the question is this going to be a longer-term breakout on ExxonMobil here? It's not exactly like the breakout that you saw on Walmart out here, but still, nonetheless, this one goes back to February of 2011. That energy sector most likely will not croak until ExxonMobil gets back at least below the 88.23 level. That is, again, the swing point high, the resistance level, now support, that goes set up on the weekly chart from February 25th out there. I suppose what we ought to do is switch over and just take a look at the monthly chart, see if there's any other picture here on the monthly chart that maybe rings a bell or we need to pay attention to. Let me go ahead and get rid of this longer-term exponential moving average. That, too, on the longer-term chart, that's a bullish crossover. But let's go ahead. Let's not spend any time there. What we do have, we can see that real resistance inside the monthly chart, we'll just draw that line across the screen, really being set up right about here. And it was really set up, folks, by this little bearish engulfing right here. ExxonMobil, this is coming back. If you take a look at nice move here, nice A to B move, most certainly. Take a look at that. Coming off of the 2002 lows in July out here at a price point of about $29.75, but been consolidating most certainly since October of 2007. But you have this candle right here. This was the bearish candle right here, which was January 31st, 2008. Big bearish candle. Big bearish engulfing candle. We can see that's setting up the resistance level, which really are going to be the wicks. That's going to be the high of October of 2007. That high, 95.27 out there, as well as the high on December 2007, 95.10. We can see here it tried to break up over that in May of 2008, was unable to. And even in this case, I don't have the volume. I don't have the weekly volume up on the chart right now. But we know where the real resistance is inside ExxonMobil. But right now, doing nothing more than traveling sideways. Let me see if the volume here pops up. Yeah, we've got the volume now up on the screen. And, big strong area certainly of support is going to be the October 2008 highs, which is $81.75. So if it does break now, if you take a look at what also is there, as we draw the line across the screen here, we're going to see that was a January breakout as well, the gap up. Here's the December. No, I apologize. That's the June 2012 time frame here. So you can see this level that gap has not even been tested on the weekly basis. That would be coming back into that, in essence, the June 4th gap. I would imagine that would be on ExxonMobil. So that's ripping apart ExxonMobil for sure. Let's go take a look at some of these other stocks here, popping and dropping. Let's see here. We got MasterCard. I know we said we were going to go take a look at maybe some of the retail stocks that were popping. Michael Kors up about 3% this morning. So let's go. I haven't looked at the stock chart on Michael Kors in a while. So let's go take a look at it and see what it is doing. Boy, this would be let me pull this back. Let me just refresh my screen. And if this stock could ever pull back, and we'll go take a look at the area where it could pull back to, it would be, assuming it's pulling back on the right volume, would be a very nice buying opportunity. On the daily yesterday, let me just put this relative strength indicator out here. You did get a key reversal session yesterday. That key reversal session, take a look at it. We were talking about it earlier. We just simply used the relative strength indicator as one of our indicators to identify whether a stock is extended or not. Here's an example of a key reversal day. Certainly in an uptrend. Take a look at how the high and low was exceeded of the prior candle. We close in the opposite direction, so you've met all of the criteria. Now let's just go take a look at the swing point that it was going against. And then from a volume standpoint, let's go see if it was failing on volume or moving into a swing point with volume out here. Because in reading the message of the markets, you really need to be able to do the full read out here. You can't just use candlesticks alone. Candlesticks are helpful to understand the market signals, but candlesticks must be used with anything else that you use, any other trading strategy that you might use out there, whether it's the Chapman wave with Basel coming up next, whether it's a to B equals CD pattern, whether it's some kind of a Bollinger Bands that you might use, whether it's whatever you might use out there, that's what, and whether it's volume, you want to be taking a look at volume. So even though you had a key reversal day yesterday, the key reversal day was going against the swing point of November 2nd, 3.6 million shares. Yesterday, moving in that area with 5 million shares. Moving in with 5 million shares, even if it's a key reversal day. Would you go ahead and short this? I wouldn't. Doesn't make any sense. You got 5 million shares. You want to see the high of yesterday, $60. Ooh, $60 even, Steven. Wonder if that's a Basel round number high out there on Michael Kors. Well, we know it's a round number high. Maybe Basel will fill us in on any meaning of that round number high. But with volume up there, you got a key reversal day, and the market's it's moving up just a tad. But where the nice buy on this is, it's right down here where you've got this gap up support. That is August 14th, 2012, when it broke out. Did it with volume. Did it with nice volume. 18 million shares out there. You did have a little bit of a sell-off. I don't know what was behind this move here, September 25th, but you did see it sell off with 25 million shares. That certainly was some institutional selling out there. You had some additional institutional selling right here during the November 13th level. But we can see, even as the market was moving down into November 16th, what you can see is that area held 4.7 million shares. We're going against the 18 million shares, not enough to bust it down. You had that, excuse me, you had that level tested one more time in December, 6.3 million shares coming against it. So the gaps, folks, are these open windows are your friend. They absolutely are your friend out there, and that's why you want to be paying attention to them. If Michael Kors can come back down to that level and test it with lighter volume, that's the horizontal line going across my screen. That's going to be your August 14th low, 47.74. Might be a nice time to pull the trigger. Don't know that it'll get back there, but if it did, that would set up a nice buying opportunity, and that was on Michael Kors. To the downside here on the retail side, what was it? that was moving to the downside. I don't see it here off the top of my head. But let's go take a look at MasterCard. Haven't checked in on MasterCard for a while. MA is the ticker symbol. That's trading up a bit this morning. You got Apple in the green, so we'll go take a look at Apple. It is Apple is trying to get back into the 435 area. That's what it will do on its next test. As we take a look at MasterCard, really not doing a whole lot other than consolidating amongst its highs out here. Did have this interesting session on January 31st, but still maintaining the holdout at the highs out here. Certainly doesn't look like a short trade to me. Let's go, what did I say I was going? Oh, Apple. So we go look at the Apple out here. As we go take a look and pull out Apple, give me a moment to find it. It should be right in front of me, and it is. So we'll pull this down. Now, we could see yesterday Apple was testing the resistance level, which was really set up by this January 25th candle, that low 435. That 435 level tested on March the 5th. Tested and rejected. Tested again on March the 6th out there. Tested and rejected. Got over it on March 11th. Gave it up yesterday. Volume-wise, though, nothing to speak of. 16 million shares yesterday, 16 million shares the day before, and this morning so far, in a little bit over an hour of trading, 3.7 million shares. You do the math on that, that says you're probably back to about a $16 million share day. What Apple needs to do in order for the bulls to have some more foothold, which would be helpful, is close above 435 and stay above 435 and run up to the resistance level, which is really going to be that resistance level, again, being the candle from January 15th. That swing point, has a swing point out there, and that price point on Apple would be 483.38. But Apple's got to get above 435. Otherwise, just setting up for its next move down by working off nothing more than a oversold condition. That's on Apple out there. Let's go check in on the ETFs. Haven't done any work here. Take a look at the daily ETFs. So let's go take a look at the Qs. The Qs out here have a 0.786 Gartley pattern. This a Gartley sell pattern, which really trying to hold it in check here is this little downdraft, this little gap down from October 5th out here. But we can see the Qs, in order to be able to show any weakness here, so, to put this together with the overall market, what the Qs are going to have to do, the Qs are going to have to bust below the March 5th gap up, 35 million shares. Not a lot of volume out there, but if you do take a look at yesterday's move in the marketplace, only 27 million shares as it was pushing lower. No way is that going to be able to break out the gap, the gap up, the low 68.08. That's what you should be paying attention to. Now, 68.08 is nothing more than the first level of support out here. Your next level of support is the high of March the 4th out there, and that level is 67.69. Now, no volume really there, only 19 million shares. So you want to be paying attention to the level of 68.08, and that is on the Qs. Still a valid Gartley sell pattern out there, but so far not enough bulls showing up for work out here. And let's go peek in on the diamonds, see what Lucy in the sky with diamonds are doing here. Now, yesterday you've got this little doji high wave candle, really high wave candle here, similar to a doji. It would be very easy to create a bearish engulfing candle today. All you need is a close on the diamonds below 144.29. But folks, if it closes where it is right now, 144.24, I don't even care that that's a bearish engulfing. Those bodies are so small, you need more conviction than that. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. At Dow off 17 points right now. S&P totally flat. Composite down point, and the Russell 2000 up 51 cents. Let's go finish off the ETF structure out here. We'll take a look at the SPYs and the IWM. If you're watching on Tiger TV out here, what you can see in the SPYs, we see a 1.618 butterfly sell pattern. The exact number looks like completes right around the 156.50 level. Of course, the SPYs got up to 156.10 yesterday, so we can say the pattern is basically completed, but you'll see two red lines coming across my screen out here if you're watching on Tiger TV, and of course you know that those lines mark the October swing point here. I'll go ahead and pull this back, and that's really the swing point to be paying attention to, where you really want to be able to get a trigger. This is the swing point, excuse me, on the daily chart from the highs. October 11, 2007. The number you want to write down on a pad of paper, 154.54. That's the low. That's the low. You're looking for a close below on the SPYs before you go short the market. 157.52. That's the high. 233 million shares on that trading session. As we pull this forward now, what we'll see is as we're into this trading session here, nowhere near the volume, but still price traveling with inside that level. And as long as you are trading inside a swing point, you don't have a rejection. You don't have any kind of rejection. You're just waiting to, right now it could just simply be building a little bit of cause to move higher. With regard to yesterday, take a look at the volume. 105 million. As the SPYs broke into this area, breaks into there, approaches it with 121 million. Well, geez, that's not close. Then gets in there with 94, 86 million shares. What it closed inside that session with 123 million. Nowhere near enough volume. Nonetheless, the upper part of that range, hopefully you wrote that number down on a pad of paper. You've got the SPYs likely going to go try to tag that level before it gives you information, or a close back below the low of that session. Then we would have a rejection on both price and volume. Something to think about. That is on the SPYs out there. If we go peek in on the IWM being the only index right now in the green. Well, I won't say only index, but of the four core indexes, as we take a look at the IWM, 2 dojis in a row out here so far. You've got a 1-to-1 A to B equals CD up. That price point inside the IWM, we're taking the A point as June 4th, 2012. That's logical. Your B point is the high in September the 14th, 2012. Your C point being none other than the lows in November. 1-to-1 A to B equals CD, 93.96. So far, the high that we've gotten to, 93.75. That is good enough for me, but you have not seen any kind of a sell signal here inside the small caps here, other than just simply working off an overbought condition as it moves sideways here right now with these small-bodied candles. If we go peek in on, let's go peek in the currency market. Let's go peek in on the euro. We took a look at the euro on the daily chart earlier. I did mention that the bulls would start moving in here as we took a look at the 30-minute chart. Why? Well, because on the euro, what we did on the 30-minute chart was got into that extreme oversold territory. That's the beauty of using these tools out here, folks. And right now, if you get a close above 1.29394, and it's trading out at 386 right now, you will have your first set of bulls showing up trying to protect their position. But, right now the euro is nothing more than really oversold, so we'll just have to see what kind of bounce. But nothing goes straight down, nothing goes straight up. And if you want to understand the heartbeat of the marketplace, I suggest just taking a short-term chart. 30 minutes usually work best, and just using that relative strength indicator. Stay tuned, folks. Basil Chapman is up next. After Basil, we go out to Larry Pesavento, then Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien Show from 4 to 6. Have a great Wednesday. I look forward to seeing you in the morning. Take care, folks.